Let's take a look at the trade recaps for 11th February 2020. We had an event going into the day, with the event being the Delhi Assembly election results and the counting. The pre-market was suggesting a healthy 70-point gap. This meant that we were going to open above the B period tail of the previous liquidation profile, and it was quite a bullish open. And even the order flow confirmed the same. It painted heavy greens, and in order flow terms, it painted a lot of stacked imbalances, which was a bullish sign. And these bands tend to act as support for the shorter time frame, of course. So, utilizing these odds in favor, I was monitoring for continuation signs, and I did when enter into some longs. I did not fully capitalize on the move. I covered my positions very early. The move that made me the money was the retracement move to 12,150 levels, wherein I observed a nuance on the order flow, which I am about to demonstrate you and show you what was the basis of my entry. This is an order flow chart on 160 range bars. Look up range bars for your understanding. The top ones are the volumes. So if you see on that pullback, the shorts totaled up to 2800 combined lots for a move from 12,160 to approximately 12,145 levels. And if you notice the immediate candle, wherein approximately 2,600 lots were selling, so it was not like only sellers were selling. So for every lot to be traded, there has to be an equivalent buyer to that. So with that 2,600 lots, they had nothing to show for it, and with the amount of greens we've had in the day and possible supports, I have used this to scale in my longs or re-enter my longs, and this is where I capitalize on the move. And a couple of subsequent small scalps later, I was up about 45k for the day. So we are into the D period, and at this moment, it seemed like a profile is in the making in both the indices. However, I began noticing a couple of nuances that were not too exponential at that point. So it was just one nuance, and we should not get fixated on noticing one nuance unless it is either in the side of the context, or it also depends on where we are. So at this point, my belief was 12,180 would get challenged again, but it was a question of when. Before breaking the clustered lows, which were a weaker reference, and possibly testing 12,140, which was the developing value area low, or it was a straight drive. Either way, if it goes straight through 12,180, it is kind of not advisable to chase longs then when you have weaker nuances on the downside. But however, having said all that, I got lost in the price, or maybe my MTM has made me complacent, but I kept adding some positions, hitting my stops and doing the same. And somehow, like, I'm not very proud of it, but I almost made my M2M to negative, in the negative territory, slightly negative territory. And this is the thing with the P profiles. Once you miss the initial move, or if you think like you haven't capitalized to the extent that you should have, we tend to also do such kinds of errors. And this was purely my, I'm not proud of the way I have traded following the A-B period. Uh, Eventually, after getting some kind of a move, some semblance of a move, I did exit at 14k, which eventually became 12k. But at this point of time, I did notice some weaker nuances, even though the price cleared to about 12,175 from the 12,140 levels. I did notice some weaker nuances developing on the downside, which was a sign of the locals trading. So I did not trade any further and decided to remain on the sideline because once the AV period move was done, that was that for the day. So unless new money enters it, there's no point in chasing markets that have lost momentum. Hopefully, you have learned something from my experience, and I hope I have made some kind of difference to your trading. Thank you once again.